bank reconciliation is a process that you perform to explain the difference between the amount of cash you have in the bank as compared to what your records show. You compare your records to that of your bank to ensure you are in agreement. Differences are explained. For example, your ledger account could show $1,500, and your bank statement could show $1,760. The cause of the difference of $260 could be a variety of reasons. You will see we could have two types of differences. The first is just a timing difference. For example, you write a check and it hasn't cleared the bank yet. Or you have deposits and you have not yet taken it to the bank. These are timing differences. Or you could have an error or a fraud. Normally, the bank reconcilement is done monthly. The bank reconcilement is a key control of cash. Without it, you don't know if your records are accurate and if someone may be taking money from your bank account, you wouldn't know it. I have seen several companies get lazy and not perform timely bank reconciliations and then have a fraud and not even know it. There are several formats you could have for bank reconciliations. I will show one that is quite commonly used. As you can see, the company's ledger shows cash balance of $12,000. The bank statement shows that is the amount that the company has in the bank. Therefore, the reconciliation will show that 12,000 equals 12,000. There is nothing creating the difference. I plan to show 7 different situations that could occur to cause a difference between the book and bank balance, cash balance. I will define each one of these items and show how each one affects the bank reconciliation. Then I will put them all together in one reconciliation. Several of these items trigger an accounting debit-credit entry to be made in your books. These items are known as reconciling items. They are deposit in transit. This is a deposit that has not yet been made at the bank. Outstanding checks. A check that has not yet cleared the bank. Interest income. This causes a debit-credit accounting entry in your books. This is when the bank gives you interest and you have not recorded it yet. Bank service charge. This causes a debit-credit accounting entry to your books when the bank charges you in your account. Non-sufficient funds check. This is more commonly called a bounce check. This one also causes a debit-credit accounting entry in your books. You make an error. This causes a debit-credit accounting entry in your books. Or the bank makes an error. These are the 7 different types of reconciling items that I plan to go over, each one on an individual slide. Here is a deposit in transit. You have $12,000 shown in your books, and the bank shows that you have $11,000. That's because at the end of the day, you received an additional $1,000. You record it in your books, and that results in a debit to cash of $1,000, thus increasing your cash by $1,000 to $12,000. However, since you have not yet made a deposit at the bank still shows $11,000. This is a timing difference, and in a few days you will go to the bank and make a deposit. Meanwhile, it is shown on the bank reconciliation document as an item increasing the bank balance to what it will be. Now we have $12,000 equals $12,000, and we consider the bank account reconciled. The difference of $1,000 is accounted for. Outstanding checks are checks that you have written but have not yet cleared the bank. As you can see, the books show a balance of $11,900 and the bank shows $12,000. This is because you wrote a check for $100 on December 31st and mailed it to your supplier. Your supplier will eventually get the check, cash it, and it will go through your bank account. But right now the bank shows a $12,000 balance because the check has not yet gotten to the bank. It is considered outstanding. We show it on the bank reconciliation as a reduction of the bank balance because it will reduce it once it clears the bank in January. As you can see, the bank account is reconciled. $11,900 equals $11,900. When you earn interest on your bank account, most often the bank just puts it into your account. In this example, the bank has credited your account $10 on December 31st, bringing your balance to $12,010. You have not yet recorded it in your books. Therefore, the bank balance is $10 more than your book balance. On the bank reconciliation, you must show it as a plus to your cash. Now we are in balance. $12,010 equals $12,010. Because you have not recorded the $10 interest, you must do so. The accounting entry is that cash is increased by $10 and interest income is increased by $10. When the bank charges you a service charge, they take the money right out of your account. This causes a difference between your records and the bank until you record the reduction. Until you make an entry, it shows up as a reconciling item on the bank reconciliation. In this example, the bank has charged you $20 for the month. The bank would have a balance of $11,980 after the service charge. The books are at $12,000. On the bank reconciliation, you must show the service charge as a minus to your cash. Now we are in balance. $11,980 equals $11,980. However, there is still one more step. All items that are shown on the left side of the bank reconciliation are an increase or decrease to your ledger balance, but have not yet been recorded. We now need to create a debit-credit ledger entry. We analyze the situation and create the appropriate journal entry. Cash is decreased by $20. This would be a credit to cash. Office expense is also increased by $20. That would be a debit to the office expense. The journal entry is then posted to the appropriate ledger account. A non-sufficient funds check, also known as a NSF check or a bounce check, can be complicated, but once you focus on what exactly happens, I think you will understand the accounting. First, let's go through what happens. A customer owes you $300. Therefore, that is shown on your books as a $300 accounts receivable. When the customer pays you, you will debit your cash and credit the accounts receivable. The credit brings the accounts receivable to zero. Obviously, it's zero because the customer doesn't owe you anymore. You take the check to the bank. The bank puts the $300 into your account. But once they go to your customer's account to collect, they determine that the customer has no money in his account. Therefore, the check bounces back to your account and the $300 is taken out. The bank will show it as going in and then coming out. You have a customer that owes you $300. When the customer pays you, you will debit cash and credit accounts receivable. You take the check to the bank. The bank puts the $300 into your account. But once they go to your customer's account to collect, they determine that the customer has no money in his account. Therefore, the check bounces back to your account and the $300 is taken out. The bank will show it going in and then coming out. In this example, the books are $12,300 and the bank is $12,000. On the bank reconciliation, you must show the NSF check as a minus to cash. Now we are in balance. 12,000 equals 12,000. You must also make a debit-credit accounting entry. Therefore, you must reinstate the $300 as a receivable with a debit to accounts receivable as the customer still owes you the $300. The credit goes to cash because you never really had cash. When the journal entry is posted to the ledger, you can clearly see that the accounts receivable of $300 has been reinstated as the customer still owes you the money. At times, you make an error in your accounting records. Here's what would happen if you wrote a check for $250, but made a mistake and recorded it in your books for $25. The bank would cash the check for $250, the correct amount from your account, but you only show $25 coming out. Thus, the book balance would be $225 different from the bank balance. In our example, the book balance is $11,975 and the bank balance is $11,750. On the bank reconcilement, you must show an additional $225 being subtracted from your cash. Now we are in balance. $11,750 equals $11,750. To correct the way you recorded the transaction, you must take out an additional $225 as you already recorded $25 of the $250. This would be a credit to cash of $225 and a debit to supply expense for $225. Now you have supply expense where it should be at $250. Unlike the game Monopoly, there's no such thing as a bank error in your favor. If you're given too much money by the bank, you will legally be required to pay it back. If this happens, you should notify the bank. In this example, the bank makes an error and puts another customer's $200 deposit into your account. As a result, the bank balance is $200 more than your book balance. On the bank reconcilement, you would show the erroneous item as a reduction from the bank balance. Now we are in balance. $12,000 equals $12,000. If we put all of these items together into one bank reconciliation, here is what it would look like. The balance per our records is $12,535. The bank statement is showing a balance of $11,300. The difference is caused by the reconciling items. The deposits in transit is $1,000. Remember, this is a deposit that has not yet been made at the bank. Outstanding checks are $100. This is a check that has not cleared the bank. You had deposited a $300 non-sufficient fund check from a customer into your account. Interest income credited by the bank into your account was $10. The bank also took a bank service charge, office expense, out of your account of $20. This is your error where you recorded a $250 check for $25. And this is the bank error where the bank put a $200 deposit into your account in error. Once we apply all the reconciling items, the book balance equals the bank balance. $12,000 equals $12,000.